Hello traders and welcome to another video review. Today is Wednesday, May 27, 2026. Let's take a look at the economic calendar for today. We have a very important data release for today. The first one is the data from the Australia construction work done, CPI and trend CPI had been released overnight. Reserve Bank of New Zealand interest rate decision was in line with the expectations. The bank decided to keep the interest rate at the level of 2.25. Together with the interest rate decision, monetary policy statement, a rate statement and press conference has been issued. The other major event for today is the ECB press conference, scheduled for release at 7 o'clock. And then at the same time, we got 5-year note auction from the US. And at 10:30, we got API weekly crude oil stock data release. And that's about the situation here on the economic calendar. So without any further ado, let's switch to the charts and we start with euro dollar. For our time frame chart of the euro dollar is showing us a sign of the slight strength because the market keeps coming back towards this supply zone, the red rectangle. We are about to retrace 38% of the Fibonacci. We are about to hit 38% of the Fibonacci retracement of the last wave C to the downside, and this retracement is located at 1.1661. The upper supply zone is located at 1.1668, and then we have 50% at 1.1686, and the last result 61% located at 1.1713. Momentum is quite strong, 57 points. It's positive, so we might see some kind of a price action here inside of this zone, but the breakout is needed for the confirmation, for the first confirmation that the ABC movement to the downside has been completed. Otherwise, the market will stay under the bearish influence. Now 68% on the cable is still located at 1.3520, and we missed roughly around 12 pips before we hit this level. However, if we move this here, because it's slightly below, but it's still there's a still kind of a miss here on the cable. So let's just not complicate this situation here. Okay, the magnet goes here, and the 100% Fibonacci retracement is still at the very same level. We have a movement lower. We have a movement lower back inside of the demand zone that used to be a supply zone. As you can see, we moved as low as 1.3433 because we went from the extremely overbought conditions, almost from the extremely overbought conditions, just below the level of 50, right? So we have a game of almost here on the cable. Almost hit 61, almost hit extremely overbought conditions. I guess that if we were a little bit stronger, than this level has been hit without any problems. So let me just place this line here. This is the most important retracement level. Nevertheless, it looks like this overlapping waves here are still corrective in nature. This looks more impulsive than this, which means that maybe, just maybe, our scenario can be labeled like this: 5 waves to the upside, A, B, C to the downside, very, very irregular flat. Maybe wave B is done, that there is a time for the wave C to the downside to complete the at least 3-wave corrective cycle to the downside on a cable. US dollar versus the Japanese yen, testing the upper resistance line 159.36. This is the range upper line as well, with the momentum bouncing strongly from the level of 50 here, right now 64 points. So we might see breakout to the upside on the US dollar versus the Japanese yen. Next target 160.05. So bulls in control of the US dollar versus the Japanese yen. Gold on 4-hour time frame chart, gold is below the potential F flag or bear flag pattern. So this is how it looks like right now. Let me just get it more visual for you guys. So this is the flag pattern here. We might see it a little bit more engaging right now, as the momentum drops significantly towards the level of 37 points. Next target 4,453, the lows from the May 20th 2026, right? So that's the gold. S&P 500 new all-time high 7,547. The level of previous support has been tested, 7,504. Momentum is still positive, however only 59 points. Nevertheless, the upward movement continues. This is the biggest correction here. Let me just place it so as a price range. That's the biggest correction during this entire move. So as long as we are trading up, the uptrend is being continued, and as long as we won't go down more than minus 2.44%, the overbalance is not present yet. Crude oil, beautiful test of the lows from the May 2026, 94.73, rejected, and now 91.57 is being played. We are getting closer and closer to the gap. We are getting closer and closer to fill this gap properly, right? So under the bearish pressure is the crude oil these days. Let me just add the horizontal line for the level over 50, so you can see that situation here is really bearish on the crude oil, at least in the short term. And last but not least, rejection of 78,000 on the Bitcoin. Yet again, we drop below the level of 50. Now the RSI is 40 points. Bears are in charge of the market. They don't actually care about this level anymore, I guess. So let me just move it here. That's another technical support. That's another low. That's another technical support. And then there is very nice demand zone. So now what we need is a test of this demand zone and then movement to the upside. We already went minus 10.44% from the swing high made on May 6th. So we are on the lows basically. Yet again, minus 10% is quite big. So this situation here, this movement to the downside can be interpreted as a rejection of the supply zone, which means bears are in charge of this market right now. If we break below this very thin demand zone, next target is a lower channel or flag pattern level, roughly around 71,000, and then we will see. For now, bears are in charge of the market. Bearish pressure intensifies. Over minus 10% from the swing high into the supply zone. Bears rule the Bitcoin in short term for now. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.